What's up, everybody? This is Kyle with Kyle Sterling Properties, and this is The Real in Real Estate. Y'all, I am so excited to share this new news with you. I am partnering with my brother, Kendrick Sanker, a top financial advisor in the DMV, and we're going to be talking about real estate and financial planning and how the two work together. Oftentimes, you don't see financial planners working with real estate agents when you are making real estate decisions, but today we're going to be discussing the importance of intertwining the two.
Kendrick Sanker, Sanker Financial, 7,000 meetings, 7 years, 429 clients, 42 different states. Love what I do, love giving back to the community, love sharing how financial planning can help folks in regards to real estate, their journey, etc. And so I'm looking forward to this partnership and can't wait to see where this thing goes.
I'm excited for this partnership as well, Kendrick, and I am so excited right now because this is unique. The person that we have speaking today and is really going to talk about his home buying journey and his financial planning journey is brother Brandon Cuffy. Brandon was one of my clients. He purchased a home last year in November 2022, but he's also Kendrick's client as well. And so he's going to give us his unique experience of intertwining the two and what he would have done differently and what he learned from his home buying journey.
Kyle, Kendrick, thanks for having me. Pleasure to be able to be on this episode with you guys. So I am Brandon Cuffy. I'm a lawyer here in the DMV, born and raised in Prince George's County. I practice at Miles and Stockbridge PC in DC, where I focus primarily on corporate, private equity, private investment fund, and general corporate law.
Why was home ownership important for you?
Home ownership was important for me, kind of based on the topic of this conversation, just generational wealth, having a place for my kids, having a place for their kids, having a place that I could call home, a place where I can play my music as loud as I want to, play it as quietly as I want to, and knowing that there's always a place for my children's children, and the rest of my family to be able to go to. Going
through the home ownership and home purchasing journey, what was the one thing that surprised you?
Man, the time. We did new construction, and I assumed that it was going to take a while. And a little bit of the back and forth we had with the developer and the time that it took. But I mean, it just took longer than I thought it would. I have friends that went through the process relatively quickly, relatively easy, but it really took time. And I think I started to appreciate the fact that it was taking a while because it was taking a while to ensure that things are getting done right. So I like the fact that we got our home. It was what exactly we wanted, and it took the time to get there, but it was worth it. But that was a surprising aspect of it, just the amount of time it took to actually get into the home.
Consumers would go to the developer, they start talking about the new construction, and a lot of times they don't get a realtor, and they don't have representation when they go through the new construction process versus just purchasing a home that's already built. What do you feel were some of the benefits of having a realtor versus if you didn't have a realtor purchasing a new construction?
I remember the rep of the builder saying, "Oh, this is new construction, you don't need a realtor." And I immediately said, in my mind, expletive, yes, I do. I think the benefits are wide. I think the benefits are the same as if you were buying an existing home. Someone to help you go through the contract. Like, I'm a lawyer and I read contracts all day long, but I don't understand myself the nuances of a residential real estate contract. So having you by my side to actually explain things to me was super helpful. The process, just getting a sense of, we talked about timing, but getting a sense of the overall process and the timing of it, the pace of it. What this means when the developer says this, what that means when the developer says that. I think just getting the residential real estate speak was super important, and helping me sort of map all the things out. And just the little tricks that you gave me about paying off the mortgage and how to stagger things and just how to think about the process overall. I think having you by my side was beneficial.
I appreciate that because it seemed like the most important parts of having that real estate agent was for someone want to advocate on your behalf, to translate some of the jargon. And although you're an attorney and you read contracts often, there's still some nuances that you're not as familiar with, that you wanted someone who was more aligned with that experience to be there for you during that process. So now we're going to transition a little bit. So talk to me about how you know the top financial advisor in the DMV, Kendrick Sanker. How did you all get connected? What has that process been like? Explain to us, what's it like to have a financial planner and the best financial planner?
So Kendrick reached out to me, as many financial planners reached out to me, through cold call. He and I share a mutual connection, a really good friend of mine, and I usually get those emails or those calls and I just sort of decline or say I already have somebody or I'm not interested. But there was something about the way your brother stepped to me. I was like, you know what, let me talk to him. So we had a session, was a really good, thorough, thought out conversation, and I thought, you know, I've gone down this road with some other financial planners before. They've been okay, but there was a way that Kendrick presented and a way that he packaged what he could service me with that just made a lot of sense, so I decided to leap in with him.
The first meeting Brandon and I had, we had an initial conversation to go through background. He doesn't know me from anyone. And I don't know him. And so I tell people all the time, trying to find the right financial planner is like trying to find the right therapist. Not everyone's for the right person. And so in that first meeting, I really got to know him, his background, where he's from, how he knows the person that referred me to him. And even more importantly, like what's most important to him, personally, professionally, and financially, because there's no way I can make a recommendation to anyone if I don't know where they're trying to go. And so that was the meat of that first meeting, but also gathering some data so that the team and I could come back and say, hey, in this second meeting, based on what you've shared with us, here's what we would do if we were in your shoes, and this is why. And so that ran into the second meeting, and then from there we had a final meeting to say, hey, do you want to do this all on your own? You have the notes, you have the answers. You are more than happy to do this on your own. Do you want to do this with someone else, or do you want our team to help you implement some of the things that we've kind of discussed in these previous 3 meetings? Everyone has different goals, and so some individuals that we get referred to or that I might meet might say, Kendrick, I'd love to have a financial plan that's tailored to my goals about getting married in 2 years, purchasing the engagement ring, buying a home, buying a vacation home. I moved to DC for the first time from Boston, and I'm trying to figure out the lay of the land of, you know, how do I budget for this new DC lifestyle. When I meet people that go through a major life event, whether it's having a child, buying a home, transitioning to a new job, all of things that ironically have just happened in Brandon's life, that's where we get deeper into like, okay, like here's what our clients have done that have helped separate themselves from the rest of their peers, and here's some things that you might find to be helpful.
Okay, so you mentioned buying a home, because Kendrick just said he bought a home. Were you his financial advisor before he bought the home or after he bought the home?
After he bought the home.
Brandon? And so talk to us about that, because we want to really figure out this correlation between financial advisor and financial planning and real estate building.
Yeah.
And so like, what benefits could have happened? Like, what would that conversation look like had you connected with him prior to purchasing his home?
Yeah, I think it's just seeing things from a different lens. That's probably the best way I can put it. And so one exercise that Brandon and I did was a simple exercise. It's funny to say, just a budgeted template.
That B word.
That B word.
We don't like it. We don't like it. It's 2 B words in the world we don't like it. Budget is one of them.
Budget is one. Now, we went through the budget template, and he had gone through one before, but we really dove deep into like, okay, if we purchase this property, like this is how it affects saving for retirement, for example. Things that people don't necessarily correlate in some capacity. And so we really just got a broad look at, here's what our expenses are, here's what's coming in, here's the other goals that we have, even outside of real estate. And I think for folks that meet me initially, if we can go to the exercise from the very beginning, that'll help you have a more broader lens on, okay, like here's the kind of pricing, like here's how I can communicate with my realtor on what fits in my plan. And I think that's the biggest piece.
Okay, Brandon, so you had that conversation with Kendrick, and he told you, now you had this house, this was how it's going to impact the rest of your financial portfolio. Did you have buyer's remorse from that conversation, or were you satisfied in your decision? Like, what was your thought?
I didn't have any type of buyer's remorse.
Okay.
But I really do wish I'd implemented a financial advisor before signing on the dotted line, because it would have been good to have an overall picture of my financial picture before buying such a large asset. anyone that buys a home realizes that it's a big purchase, it's a big thing, it consumes a lot of your days, your nights, your weekends, your thought, and you know, in reality though, it should be at least a line item on your overall planning, on your overall budget, and you should appreciate it for that. And I think a financial planner, like Kendrick says, helps you compartmentalize it and contextualize what that actually is in your overall picture. So yeah, you know, I didn't have any remorse in buying it. I loved it. I think my wife and I were smart when we were thinking about our finances around it between the two of us, but it would have been amazing to have someone with Kendrick's knowledge and experience kind of helping us guide the ship before we signed on the dotted line.
I think that what you said is so important because I've seen the benefit of clients who did use a financial advisor through their home buying journey, and I felt like they were more confident in their decision. Like they didn't really ask as many questions around, am I making the right decision from a financial perspective, because they had that person advising them, which I think was really cool. But I also know the reservations, and we talk about, going back to it, budgets scare people, especially millennials, especially in general, because as a community, we don't like to talk about finances. Like we don't like to have transparent conversation about finances, especially our own finances. And so I know sometimes I make big decisions without talking to a financial advisor. And so like, Kendrick, what would you say to that person who gets very anxious when having financial discussions? Like, how do they get over that fear, that nervousness?
Yeah, I mean, I think that poses a good question. In my opinion, I feel like when people understand their number, they figure out where they need to go. And I think the only way to get through that is looking through the mirror. And that's not just with finance, that's with anything. And so I'll give you a quick example. If I were to say, Kyle, if you want to be financially independent by 45 and you make random number 10 grand a month, if you don't know how much to save, then you don't know how much to spend. And so if we find out through our experience, through understanding your goals, through understanding your budget, that for Kyle to be on track for 45 off of 10 grand a month for the rest of his life, he needs to save 3 grand, then you have the full freedom of mind to know, okay, I can spend this other 7 grand to do whatever I want to do, and that gets rid of the guilt, that gets rid of the anxiety, that gets rid of the stress. But if we don't know that number, we cannot move forward. And so I think the pathway to get through this entire experience is we have to figure out your number. You have to figure out your number, because once you figure out your number, you just automate everything.
So I have a financial advisor, and throughout my financial planning journey, one key component of it is life insurance. And oftentimes even that is something that we stray away from, because like, who wants to plan for their death? Like no one wants to talk about death. No one wants to talk about budget. No one, like certain things that just we stay away from. However, I learned so much about life insurance policies. And so I learned the difference between term and whole. So one, explain the difference between term life insurance and whole life insurance policy.
So term life insurance, if you speak with an advisor, he or she will explain it to be like renting. You have a monthly premium. The monthly premium increases with age in some capacity, and sometimes a term policy, it stays the same. In addition, the cost of the life insurance is typically cheaper. It's very affordable, and you get a lot of coverage. And so you could potentially at our age get like $1 million policy for, if you're a male, I'd say 40, 50 bucks. However, you don't reap some of the benefits that you would like a whole life or a permanent policy, which is, again, in the real estate world, you don't have the equity in the house. It's not your house, you're renting it. The death benefit doesn't last forever. In a term policy, the death benefit expires after that term time. Just like if you have a 2-year lease, once the lease is up, you gotta leave the house or you gotta leave the apartment. And
you have to leave the policy.
You have to leave the policy.
Okay.
It's null and void, it's expired.
So you have to die before the policy ends.
Correct.
For the policy to make sense.
The only way to benefit from the term policy is by dying during
quickly.
that period.
Okay.
Yeah. So permanent is a bit unique and similar in some capacity. You have a fixed premium and it never goes up. So that one doesn't increase with age. Just like a mortgage. Your mortgage is set in stone. In addition, you can tap into what's called the cash value within the policy in 2 different ways. One, you brought up earlier, you can take out a loan, against the policy, and the interest rate is fairly reasonable, and a lot of folks in real estate and other occupations love using it for that usage. In addition, you could also just take out the cash value, just straight up. And in addition, how that would affect your life insurance policies is the insurance company would simply reduce your death benefit by whatever you took out in cash value.
The idea that I can invest into this life insurance policy, and then from there, if I wanted to, because right now we're in the market where folks are like, interest rates are so high, they're so high, which historically they're not, but we're not gonna go there. But if I wanted to, I could pull against my whole life insurance policy to essentially buy more real estate and have that loan be at a lower interest rate than what potentially a mortgage lender would offer me.
Correct. I think caveat, I always like to share with people, when you talk about financial tools, there's pros and cons. So never work with someone that says this is the golden key to financial freedom. And so in the real estate space, using life insurance as a tool is really beneficial, because let's say we're in an economy like 2022, markets are down, you don't want to touch your retirement accounts and get a penalty for it. You don't want to touch your cash just due to occupation. This is a tool that you can tap into long-term, specifically long-term, not a short-term tool, but a long-term tool.
And what you're saying is, if I have $1 million policy and I buy a $400,000 home against that policy, then my life insurance policy, until I pay that $400,000 back, it's now only worth $600,000.
Correct. So if 10 years from now you're funding into the policy, and you have X amount of cash value in that policy, you can tap into, specifically, it's roughly about 90% of that cash value. You can take a loan against that or tap into it in terms of directly.
This is good information. Like, this is great insight that I feel like we don't talk about often, and I'm like super happy that we're having the opportunity to share this. There are a rule of thumb between your debt that you have and the amount of life insurance that you take out.
Yeah, in our world, there's 3 things that we say, God forbid if this person passes away, they want these 3 things to be taken care of. One of which is your initial point, debt. If something happens to Brandon, he wants the house to be paid off, he wants the car to be paid off, any credit card debt, any debt period, that to be gone. That's typically a rule of thumb. The second one is, God forbid something happened to Brandon, education. He has a child coming into the world. Do you want your child to be able to afford education, even if you're not here? And the last one is just thinking about his spouse. It's a dual household income currently, and so if something happens to you, the household's missing half the income now, and you can't really support the family off of that the way you used to. And so, how long do you want money to go into your spouse, whether it be until the child reaches 18? Okay, well that affects how much coverage we get, or maybe be for 10 years, or until the child is 21, or even until the spouse reaches retirement. So it's a number of questions where it's like, okay, here's how we figured out how much you need, and then the next step is, all right, we have to figure out what type you need based on the budget. Is it term? Is it permanent? Is it a combination of both? And so that's where we really get down to the nitty gritty.
Brandon, thinking about life insurance and life insurance policies, what encouraged you to get a life insurance policy? Like, was it something that was passed down generational, and not saying the policy, but the knowledge?
Yeah, my kids that aren't here yet really are the motivator, making sure that the term generational wealth is not just something you say but don't have anything behind. Making sure that my legacy, my wife's legacy, can pass down for generations and generations, and that we're building enough of a family unit and have enough of a base within ourselves to be able to positively affect our own communities going forward. That was a motivator, just making sure my kids were good, my wife is good, my mom's good, and her family's good. But really just being able to look at generations from now and say, this is something that we got in place when we needed to protect them. That was the motivator.
Okay. And does your parents have a life insurance policy on you? I mean, not on you, but for you if something were to happen to them. And do they have estate planning for if they own real estate? Is this something that has been happening within your family before you became a parent?
No, I don't think so. So both of my parents came from different countries. They're both Caribbean.
Okay.
And they came to the United States for their education. And I think, children of a lot of immigrant parents that are trying to build something in this country, they don't really focus on that much. They're focused on trying to make sure they get from point A to point B and protect their kids and create a life for themselves, but they don't necessarily think about the services that a Kendrick can offer. They don't think about the services that a Kyle can offer. And so, my mom owns a lot of properties. She owns about 3 houses at this point, 3 or 4 houses at this point, and they're all divergent, just random houses, but they're not built into an overall portfolio. They go into a whole plan, and I think that's a generational thing. And I think for me, I want to do the same thing, but be able to have different buckets and understand how everything works together.
No, I totally understand. And I think that your story and your testament about your parents being Caribbeans and first generation Americans, and really focusing on the present and not having the wherewithal or the resources to focus on the future is something that a lot of folks, especially people who look like us, parents can relate to. I know my mom was a first generation college educated individual in our family. And so I think that as we continue to grow the knowledge and from generation to generation, we are the generation that really is creating the wealth. Like, I think our parents' generation was stability, and now we're wealth and the legacy. And so I think these conversations are so essential, and bringing in the attorneys and bringing in the financial advisors and bringing in the real estate experts to really talk about how we can break these curses and create long-term strategies and plans to build generational wealth. Thank you all. I think this was a great segment. Brandon Cuffy, top attorney in the DMV. Kendrick Sanker, top financial advisor in the DMV. Thank you all. I appreciate you taking this opportunity. We're going to continue to do these conversations. Brandon, thank you for coming out for us and explaining your journey with financial planning and real estate. And once again, this is Kyle Sterling.